Hi guys, just gone midday here in London. Thought I'd have a quick look over the markets, and actually just a couple of moments ago the Fed announced major expansion of market supports. They will buy unlimited amounts of treasuries and mortgage securities. Fed to buy $350 billion worth of treasuries this week, and they will also buy $250 billion of mortgage-backed securities as well. Equities is getting a bit of a boost on that. The gap has been filled, as you can see here. Just putting that back onto a 5-minute chart. We did limit down within a few minutes of the open last night on futures. That remained the case until around about 11:35, and we came back down to test that lower part of the limit a few times in the morning. The last time it traded there was around 5:30. We have since then pushed on, and this seemingly taken by the market to be enough stimulus, at least short term, to give us a boost. As with all Fed decisions so far, it'll be very key to see whether actually it lasts or not. But just having a look here, you can see we are pushing on here in equities. The dollar weakening as you'd expect. Euro dollar just up to the highest point it's been since 7 o'clock. There you go, just another push here as well. Now, being a risk asset, I would expect oil to get a bit of a push here as well in markets. And then just having a look at oil, $20 handle not quite reached again this morning. A bit of a double bottom from the low that we had last time traded on the 18th. So risk assets is getting a bit of a push here. I think for oil in general, the line in the sand that I'd be looking at would be 23.45, because above there, then we can start looking towards the $25 handle, psychological area of resistance. But above that, and oil may well continue to push on. However, these levels are going to hold some sort of strong resistance, and as lines in the sand go for equities, we're none bigger. Just moving on there to 23.17, which is that daily level from 2018. You can see that low that we did obviously gap below overnight. If we can get back above there, then you may well see a stronger rally come through here for the S&P. So worth keeping a watch on that. On the flip side, if you don't believe this is going to be enough, if we can get back below that high, i.e. the place where we closed on Friday evening, back below 22.59 3/4, then this market could, of course, drift back lower. So it's, you've got your key levels, and this area we're in now, I would almost let the bulls take control of us. We have broken above that level, but really I'd expect a bigger move to come if we can get back above that December 2018 low, or to the downside if we get below 22.50. Maybe a bit of an unwind here as well. For the dollar index, worth keeping an eye on that. Did reach new highs this morning. However, we have obviously pushed higher quite dramatically off those comments from the Fed. Putting this on that daily chart for the euro, though, you can just see the move lower we have had after hitting that 115 handle. It's just been red candle after red candle, except for Friday. We've also got that weekly long trend line in play there, so keep a watch on that. I think from a longer term perspective, if we can close the day above this low that we had on February, that will be key. At the moment, it's looking like it wants to hold. You can see here, just putting that onto that longer time frame, we just got a touch on there. So keep a watch. We haven't had an hourly close above that level as of yet since, well, what's this going back to Friday early hours. So keep a watch on that. Bears will want to take control of this. The bulls will want to see it push through. But the market moving off these Fed comments. Hope you'll have a good trading day, and I'll catch you all later on.